How's it going, everyone? I hope everyone is having an awesome start to the day here. I've got some cool stuff to go over. It's going to be a pretty fun day, I think. Sorry for the pain on your eyes looking at that, what I just did there. But, oh no, clicked the wrong button. Shit. Give me one sec, guys. I'm accidentally opening Discord, and that's going to cause my computer to explode. But yeah, I want to go over a couple things today. I have a few trades to look at from my morning scan. And let's get this closed. Perfect. Few trades to look at from my morning scan today. And I also wanted to do a little look back at a trade that we talked about on Monday. We're going to take a look at NEO. I'm glad that Eric's here. Eric took this trade, and this thing is paying off huge right now. It's really exciting. So the trade that we want to look at is a 132 butterfly on NEO. So after NEO day, we were chatting about, what we think is going to happen to the stock. And one of the trades that we looked at was, well, if you're bullish on NEO, what can you do? Right? If you think that NEO is going to continue to rally after NEO day, right? As if, maybe sort of similar to like a post-earnings announcement drift kind of, slow roll to the upside, what would be the best way to take advantage of it? And the trade that we looked at together was this 132 butterfly. So what we structured out was, Pranav, what's up, man? I told you I'd say hi every time. The trade that we looked at was a 132 butterfly on NEO, where we buy a 58 call, we sell 366 calls, and we buy 270 calls to hedge our position. We would have bought this position for $1.98 on Monday, right? $1.98 per lot. Turns out NEO moved almost exactly as we hypothesized. Eric, really congrats on taking this position. I hope it continues to move, maybe pins for you, because this trade is now going for $3.42. You would have bought it for $1.98, and you could now sell it for $3.42. You got him for $1.38? No way. So you're up like 250% on this position. That's really cool, man. That's really cool. It's really nice when these little lottery tickets pay off. It always makes me a very happy camper. Let's see here. NEO 58. Yeah. Yeah, so you can see here, it's cool actually. I have it locked. So you can see here, it was going for $1.26, and now it's going for $3.42. So this is just awesome. This is just awesome. And Eric, how are you going to manage this position? Are you just in for the ride? Are you seeing if this thing's going to pin at your strike here? Because that's kind of fun, right? If this thing pins, you're gonna make bank. That's very cool. That's very cool. Yeah, you're playing darts at this point. Hey, you know what? Yeah, have another beer. Your aim usually gets better in darts when you have a beer or two. But yeah, super exciting, man. Really happy that trade's working out for you. And all we did there, guys, remember, like when we look at these 132 flies, we're taking advantage of a couple different things. But the number one is really just the call skew, right? Where we're seeing this risk priced into the upside for NEO, and we're taking advantage of it to put on a bullish trade where, we give up this potential huge blowout to the upside where we'd make $1 bajillion, but we get a better risk reward for a slow move to the upside. And currently on NEO, it's printing, right? You would be up 250% on that position. Super cool. Daniel's asking, can you do a 132 fly in a bearish outlook? It's the exact same, except on the put side, right? So I can show you an example. All right, let's say, let's look at my little scan here. Maybe we can just look at the SPYs. There's still a lot of put skew here. Vols are pretty low on it though. Here, give me a second. Let's just do this. VTI. what's going on with VTI. See, let's just check to make sure it's not a buyout or something, and then we can. Okay, yeah, this looks like it might be like a buyout. Okay, here, let's. Or it's a fund. Yeah, we don't want to be looking at a fund. GSX. Okay, this would be a good one to look at. All right, let's take a look at GSX. This is something, if you want to get a good risk-reward trade on for GSX, you can probably do that to the downside here. So look at this, right? Daniel, put skew on GSX, right? Crazy steep, right? Crazy steep. Let's look at the 10-day options here, right? We can see that the Delta 50 is trading at 109, and the Delta 75 or the Delta 25 puts are trading at 136. So let's go over to Thinkorswim here. And let's price this thing out. All right, you'll see what I'm talking about here to the downside. So stock's trading at 48 bucks. First thing we want to do, anyone want to say what it is? We want to price out the straddle. We always want to know sort of what this is. We can use this as a quick and dirty way to find what a standard deviation is implied by the market. All right, so $3. Okay, so now we're going to come over to the put side here. Oh. We're going to come over to the put side here. 48 bucks, right? That's what stock's trading at 48.07. We're going to come at the money here, and we're going to buy an unbalanced butterfly. All right? So we're going to put our first strike here at 48. Then we're going to go $3 up, so 51, or $3 down, so 51 or 48. And then let's see if we have the 43.5 strike. Cool. Let's have a look at this. Right. Maybe I might want to go a little wider here, to be honest. Let's see. Let's just lower this. All right. So if we do this, you're getting about, like a 1 to 3 risk reward. Maybe we haven't gone wide enough on this. So let's see. Come back here. 48. Let's say we go 5 wide or 6. So 48 down to 42. And let's go down another 3 to 39. Oh, man, you're kidding me? 2. Okay, so 48. Maybe if we go, let's see here. 48 to, sorry, just give me a second here, guys. I'm going to try and structure this out. 5. It's a little lopsided. Goddamn. Goddamn. All right, give me a second. 48. If we go down 4, that would be 44. And then 42. All right, let's take a look at this. Okay, so this looks pretty good. What do you think about this? Daniel, take a look. You risk, let's do a 1 lot. So if we did a 1 lot, right, this is a really good trade to throw on if you're if you have a bullish outlook on GSX. All right, let's lower this. We'll do a 1 lot just so that we can all relate to it. All right, so you risk $50 to potentially make $350. So a 1 to 7 risk reward. The way you make money on this position is if GSX trends down between now and January 15th. So we have a couple days left on this. You can see as we move forward, this position changes drastically, right? You need the put skew, that's correct. If GSX trends down from, goes down below 47.50 and stays above 42.24, you're going to make bank, right? Huge risk to reward on this trade. Stock had a huge down move today. One risk you might have with this stock, since it is realizing a good bit of volatility, is that it could blow past your low strike, right? If it keeps moving down at this rate, it will certainly blow past that strike. But this would be a pretty good trade to put on. Something else you could do for GSX, right? Maybe we say, you know what, we don't want to take that risk of a huge loss there. We could maybe do a vertical of some sort. Right? Maybe we buy the 48 and we sell like the 43 or something. Let's see. right? We risk, $1,000 here to make 4,000. You get a 1 to 4 risk reward. If this thing goes down, if it drops another few bucks, you're going to get a huge payout. If it rallies up, it's going to cost you money, right? So this is not a bad idea either. You could do something like this. Sure, you get a little bit less of a risk reward, but you also have to be less right in a sense. Your view is a little less specific, and for that reason, you're obviously getting paid a little less. But this is also still something that looks pretty juicy, right? So I have a couple trades that I wanted to personally take a look at today. Now, remember, part of this show is we take a look at trades that you are interested in. So if you have a trade that you're looking at right now that you want me to help you structure out, give you some advice on how to manage it, show you some data for it, all you have to do is drop it in the comment box and we can take a look at that trade. But while we are waiting for that, we are going to take a look at Pinterest. So Badland, you're asking if I tape read. So like you're asking, if I'm looking at the order flow and stuff. Like, not really, man. I don't know if there's really a ton of edge there. I know it's something that's heavily promoted in the retail space. I guess, yeah, I'll talk about this for a second. Everybody seems to know now that we need to be looking at data. But here's the thing. What you're seeing in the market right now for retail education, and when I say retail education, I really mean like what you can find online. What you see there is not people trying to raise you up to a quantitative level. You see people trying to drag quantitative trading down to make it just right there accessible. And it's just not the way it works. We have to always remember we're in a competition, right? It's like we're always in a competition. The question we always need to ask ourselves is, why does this give me an advantage? Right? If it's right there, why would this give me an advantage? Right? That's the big thing that we always need to ask ourselves. And that's sort of part of like our mission at Predicting Alpha is we will never compromise the data to make people feel good. Our job is to try and make you the person who can use that type of data, right? We'll make it user friendly as possible, but we'll never compromise the data to make it more friendly. So let's take a look at Pinterest here, right? We have an implied vol at 95% and a forecast vol at 61%. So what do we think right off the bat here? Well, basically, we're using this forecast to say what's the future value of options going to look like. And what we're seeing is, the value of this forecast, we can say, okay, well, forecast of future volatility is a lot less than what the market's currently implying. So options look expensive, right? And the mistake a lot of people will make is they'll look at that and they'll blindly just go, okay, options are expensive, sell. But we need to understand why this implied volatility is so high right now, right? Stocks realizing a lot less. Look at this. We look at the 1 month implied volatility versus realized. Implied vol is just rising and rising, and the realized vol is staying low. So the foolish mistake would be to blindly just go and sell this, right? We always need to ask why, right? Guys, Irving, you're going through the bronze course right now. You're going to come to see. You cannot just rely on the data. The data can help you find something worth exploring, but you need to understand it before you place a trade, or else you could 100% be on the wrong side of that thing. Come down here to the term structure, we see something kind of interesting. We see that for the 10-day options, implied vol is not that high. 20-day, it's a little bit higher, but we peak at between the 20 and 60-day options, and then we come back down. So what can this tell us, right? The term structure is showing us how implied vol levels change throughout time. And here's the peak. We can say that somewhere in here, there might be some sort of an event, right? We take a look at the vol cone, and we can see, right here on the 30-day, this is the peak, right? Right in between the 20 and the 60. This 30-day right here, options peak, right? Exactly, Eric. Possible earnings. That's one of the first things we should look for. And guess what? We come over here to the earnings tab, and February 11th, we have an earnings for Pinterest. So with this, we now have some more information to look at, right? Originally, right, and I'm just walking through some of the methodology that you want to be applying in your trading here. Originally, we looked at this and we said that How is the implied volatility derived? So Massimo, this is the implied volatility from the market, right? It's actually like if you go to your brokerage, you'll see the implied volatility there. This is data, that's pretty well provided. We certain things we extract. So like, for example, this 20-day, there's not necessarily an option expiring in 20 days. And we sort of take a range of the options around it to create that 20-day implied vol is like the simple way to look at it. Originally we were looking at this and we just said implied vol higher than our forecast. There's some edge here. Let's trade it. But then we come here to the earnings analyzer and all of a sudden we have some new information introduced into what we're looking at. And we see there's an implied move of 14% for the earnings event. Right? Kind of interesting. So what we can do now is, okay, well, let's come back to our term structure tab here. Maybe expand it a bit here. And what if we plot the non-event vol? What do we see? Well, now the picture gets really, really clear. We can clearly see there's huge, huge earnings vol priced into this thing right now. Right? We're seeing, 18, 20 points of volatility priced into this just due to the earnings event. What that means is we cannot take a short vol trade here without having a view on what's going on around the earnings. So now what we're going to do is take a look at this earnings analyzer tab, break it down for Pinterest, because I actually think there's still a really good trade here. And I'm going to explain to you why I think Pinterest is a really, really good opportunity for people to be shorting vol. Obviously, this isn't financial advice. Don't take it on me just saying it's a really good opportunity. Do your own research. So first thing we look at is what move is the market implying, right? So this is the implied move on the day of earnings right now. Market is saying Pinterest will move up or down 14%. Okay? Well, what does this thing move on average? On average, it moves 15%. So, oh wow, the market is actually implying a slightly smaller move than what we typically see for Pinterest. And we see that they're actually implying, a bit bigger of a move than what they imply on average right now. Right? So what's going on here? Why is the market, implying more than what they do on average, but still less than what it actually moves on average? What the hell's going on here? Well, one piece of information that really can shape our view on what's going on here is realizing we actually don't have a ton of data points for this thing. There has only been 1, 2, 3, 4, 5, 6, 7 earnings events. It's not like this thing's a 15-year-old company, 20-year-old company that's had tons of earnings information released where analysts are already all over this thing, pricing it. We don't have a lot of that right now. Or we haven't historically, at least. So where am I going with this? As a company matures as a public company, the market gets better at forecasting it. Okay? But they're still implying this absolutely massive move right now, right? Which is really, really interesting. And we can see historically, buying vol has been really profitable, right? Buying calls would have been great. Buying puts, a little bit unprofitable, but overall, buying vol has been really good here. But we have so few data points. I'm still leaning short vol here, and I'm going to break down exactly why for you right now. So, what's going on here? Okay. An implied move of 14. What can happen here, right? Let's take a look. Right, sure, we had a huge, huge move on this last earnings, but besides that, well, let's think about this. What's the risk here? Let's say I sell vol at 14%. What's the risk around this? Is the risk that it moves 20%? Like when people are looking at this thing, deciding if they should be buying options or not, what's the risk here? Is the risk that it moves 20%, or is the real risk that this thing moves 1%? Right? Our potential for profit selling this thing, in my opinion, is a lot higher than the perceived risk we're taking on shorting vol here. Does that make sense? Because the market's pricing the vol to be so high. And we know, right? Remember, Eric, I think you were there, Pranav, I know you were there, when we were doing that modeling for for earnings. And we see that high implied move is a really important factor for short vol strategy. So we can see here this high implied move, right? If we sell here and it moves, 20%, it's not going to hurt as bad as it initially appears because we're going to collect so much premium for selling at this size move. But if the stock moves 1%, you only need a few of those to make a lot of money, right? This can make your earnings season, right? This can be a really, really good trade to take. So what would I do here, right? Let's go and actually take a look at what the hell could happen here. So let's go to pins. We're going to look at the February strangle, right? That's probably, if I were to put on this trade right now, that's probably what I would look at. Exactly, Eric. We're going to take a look at what happens when that IV crushes. We are going to trade the Delta 50 right here. Let's see this. All right, maybe we'll do something like this. Okay, so we're going to sell a straddle at the $80 mark, right? We're picking it at the closest to Delta 50. And let's see what happens when vol drops here, right? What kind of position are we going to be looking at? Remember, the way we can easily see what's going on here, just come to the PA terminal, implied vol at 84, or implied vol at 95 more or less. We're expecting to go down to about 65. So that's like a 30-point drop in vol. Right? What happens? What happens if we get that? Right? What is our position going to look like post earnings? It's going to fall somewhere on this line. Actually, first, let's move it forward in time a bit. Okay, let's move it to... Should we move it right to after the earnings event? Okay, let's move it there. We'll drop the vol. We're going to fall somewhere on this line right after the earnings event. If stock stays around 80 bucks, we're actually going to make bank. Right? Andrew, what's going on, man? Dude, I hope you've been well, man. I hope the new year's going well for you. I haven't seen you, I haven't heard from you in so long. I hope everything's great. Yeah, you're going to fall somewhere on this line right after the earnings event. Okay? You can see here, right? Let's bring it back, right? Just that implied volatility crush alone drives so much P&L. And the reason we see this is because of that insane implied move for the earnings, right? Sure, the market has been realizing that, but you have to remember, when a company doesn't have a ton of earnings information out, it's very hard to forecast. It's the same thing like when a new product comes out, it's very hard to price this new product. A new stock comes out, it's very hard to forecast their earnings. This 14% implied move, if we are in a position where we get a small move, right? Look at how much P&L gets driven by that drop in implied vol, right? We go from that to that. Crazy. And let's say we get that 20% move, all right? So that'd be like what, like 15 bucks, something like that, right? So we'd be up here. We're going to be losing, oh, sorry, Kyle. My bad, man. We're going to be down. We're going to be down, but look at this. It's not going to hurt that bad. So, Pranav, I'm actually not super confident in a small move. We do tend to see that when remember that live we did where we did all the modeling for earnings? We see that when a high implied move like this is a good signal to be short. And what I'm basically saying is this, right? Let's say that this implied move is actually cheap and the stock moves 20% or 25%. Let's say it moves 25%. Okay, let's come back here. We sold at the 80 strike. Let's say it goes down to 60. We would lose about $3,000, right? Assuming that the non-event vol stays around the same going into the earnings. Let's say that it moves to the upside, 20%. We go to 100. We're down about $4,000, right? But it seems risky. But Pranav, look, if you're wrong, right? And let's say it moves 20% or 25% even. You're risking 4K on a 10 lot here. Let's go down to 1 lot. Right? You're risking 400 bucks. And if you're right, let's move it forward. Right? You're making 1,000 bucks. It's not as risky as it initially appears unless you hold the view that this thing is going to have a move like it had once before, right? Once before it had a move that would really have hurt, which was this one here, where it would move 30%, right? And you hear that and you go, ooh, that's really scary. Well, let's take a look at it. If the stock moved 30%, right, that'd be like about what, $25? Let's call it a $25 move. You move up to 105. It's still a 1-to-1 risk reward, even if it moves that 30%. Do you see how selling at such a high implied vol actually gives us a pretty significant advantage? Right? We can still get burned, but it's not as bad as it initially appears. Right? Imagine we were selling it for a lot less, right? If we were selling this thing for $9, well, all of a sudden, what are you going to make? 150 bucks, and if it makes the move, you're going to lose 2,000. Well, all of a sudden, it doesn't make sense. Anyone have a question about this? I think it was 18. I can't remember. So, Arya, I'm undecided right now. The thing is, if we come back here, so something that I'm taking a look at. Let's see so one thing I'm thinking is that for this same time period, the non-event vol has been, it's not much higher, right? Or it's not much lower, right? There's not a ton of edge on the non-event vol right now. So personally, I would probably, unless you have a view on the non-event vol, I would probably put it on closer to the earnings. Right? I don't know if I would be putting it on right this second. Just because the non-event vol and realized vol are there's only a 7-point gap here, right? 67 implied, 60 realized. I would probably be waiting, personally. Look at Baidu. Okay, let's take a look at Baidu. What's going on here? What are we looking at, Kyle? Actually, I'm going to look at something else. Kyle, tell me what you're actually looking at there, and we'll break it down together. BBBY, I think, is one that I wanted to take a look at, if I remember correctly from this morning. We're going to look at some long vol. I feel like we get because I personally trade a lot of short vol. I feel like we get caught up talking about the short vol trades. Maybe it's once in a while it's fun to talk about some long vol, right? I know we got a few YOLO monkeys in the chat here. Pranav, I see you there, man. I know you're you're all about that long vol play. So what the hell do we got? All right, we got some call skew. We got implied vol at 68, forecast at 81. All right. Kyle says he wants to become a tasty trader and sell high IV rank. Very cool, dude. Andrew, thanks a lot, man. Credit goes to Jordan. Honestly, he built this thing, right? Not me. Andrew, there's so much cool functionality here, man. We have relative value scanning, watch lists, and correlation matrix, right? So let's say you wanted to look at all the components of an ETF and see how correlated they are with each other, right? I was looking at ARK yesterday, trying to remember some of the tickers that are in it. I'll throw some on just to show you what I'm talking about. And then so you can basically pick a bunch of tickers. You can select what what indicators you want to look at too. So let's say I want to look at the implied moves for earnings. I can be implied earnings move, average implied move for earnings, and the average actual move, right? Let's say I want to run all those together. So like, take a look at this, Andrew, right? We have, our tickers here. We have all the variables right here for it. And then we also have our correlation matrix here, right? So this is, you can basically see how correlated the different assets are to each other. It's kind of cool. Stanzen, do you want to let me know which one you're looking at? Remember this, the days to expiration might be different. You have to be looking at the same days to expiration, right? So we're looking at, if there was exactly a 30-day option right now, what would it be? Right? If there's not a 30-day option, it might be slightly different. But you're looking in and around that range, you should see very similar to this. And I think they do use a slightly different formula to calculate their implied vol. But, not 100% a fan of the way that they do it. But, it is good, to be using that as well. It's totally fine. So quickly here, guys, BBBY, I would just be looking to buy some vol here. I personally don't have any sort of directional bias on this thing. I'll show you a couple different things we could do though. Number one, I would honestly be looking at doing something like this. Right, we don't have an event coming up. I would be looking at buying some, maybe Feb vol. Actually, let's go back to the terminal. Let's take a look at the vol cone. All right, we can see actually the 60-day vol is pretty cheap. Maybe I'd look at buying some March vol. All right, we come out to March. I'd literally be looking at doing a, just buying a straddle or buying a strangle. Really depends. Buy something like this. If, implied vol increases, right? So one thing that could happen here, if implied vol is currently, around this time being priced at 66, the mean is 77. So let's see what happens to our position if implied vol mean reverts, heads back up to, about 10%. We would see 11. We would see instantly, we become pretty break even at the money if implied vol mean reverts, and we basically get a free ride on any move in direction. All right, stock breaks out, in the short term between 24 and 19, we'd be in the money, and our break evens at expiration are 17 and 28, right? Reason I'd be taking this trade is basically that, all the factors we're looking at for our forecast are basically just telling me that this thing's a little cheap. And I come down here to the vol cone and it lines up with what I'm seeing, right? That far dated vol or, medium far dated vol looking pretty cheap. We could expect it to come back to the average. And that's sort of what would really be driving my view on this trade. Now, let's say you had a bullish view on it. Well, maybe there's something else we could do, right? We could come here, come to the near dated options. Take a look at maybe doing something like this, right? We could buy a vertical, where we sell maybe the 24.5. 23.5. Let's take a look at this. Oh wow, I'm way out in the future here. Oops, totally didn't notice that, guys. 13. If you think the stock's going to move up real quick, you can get a really good trade on here. You risk $250, potentially make $750. Stock needs to rally above 23.70. Right, it's currently trading at 23.21. If it rallies in the next couple of days, you get an up move, any up move more or less, and this thing's going to pay out huge. So if you have that directional bias, that's not a bad trade at all to be throwing on. Looks pretty good to me. Koa, I am not. Massimo had a question here. He said, I'm clueless. I might be because I'm clueless, but the implied vol for the stock is confusing me. I thought this was only calculated for a specific option. My brokerage gives me IV for an option, but not a stock. So Massimo, the key thing you're missing there is that the option tells you about the future movement of a stock, right? The option is a derivative of the stock. So when you look at the option, right, easy way to think about it is like this. If you have a stock that's trading at $100 and the straddle costs $10, and it expires tomorrow. The market's implying, a 10% move in the next day. Right? And that is the volatility of the stock implied by the market. You can't see that just looking at the stock, but by looking at the options, you can infer what the market is implying the move to be for the stock in the future, the magnitude of the move. So, does that answer your question, man? Right? Options are the volatility product derivative of the stocks. Right? It's actually the huge mistake people make when trading options. Most people come in and they just think, oh, I think stonk will go up, buy call. And it's like, dude, there's a reason why one of the most searched questions about Tesla after, battery day earnings is Tesla went up, why did I lose money? There's a reason why that's one of the most searched questions. And there's a reason why what's happened in recent times with this huge influx of retail traders represents probably the biggest opportunity for the traders who went out of their way to learn the product, learn to work with data, learn to find inefficiencies, because they drive so much of the volatility, the volume now that it's made the game a lot more enjoyable for someone like myself. I'll leave it at that. And Kyle, you have a really good point there. You buy Tesla stonk goes up, you make money. I get it. But you buy Tesla call, Tesla goes up, calls no make money, man. That's where I make money. Right? Everybody wins. Buy the stonk, buy the call. I'll make money on you buying that call. You make money on the stonk. It's that easy, man. Everybody wins. Didn't you know trading is not a zero-sum game? So, that's what I would be doing on BBBY. I'd be buying some volatility or maybe buying a vertical if I have that directional view, which I don't. But you're getting a pretty good risk reward on it. I wouldn't, might be fun to buy a little lottery ticket once in a while. Let's see. What else can we look at here, guys? Check plug. What's your view here, Koa? I know you made a lot of money on this thing recently. Isn't this something you're pretty happy with? What is plug, by the way? I don't really know. Let's go to news and sentiment here. So one thing that always makes me skeptical is when the retail is super bullish, news is super bullish. We've already seen 100% of the option activity traded today for it. Whatever's going on here, I'm going to start looking into it. People are all over this thing, right? Let's go to StockTwits for a second. Hopefully it doesn't crash my computer. Come on, computer. Do not crash. We'll go to plug. $108,000 watchers. This is one of those retail darlings, isn't it? Let's see. What is the sentiment right now? 85%. Not as high as I actually thought it would be, honestly. Just off the bat, seeing the watchers, seeing what it is in the terminal. Right? This is obviously calculated a little differently. This is from social media, not from StockTwits. Whereas this is people who've added it to their watch list, things like that. Let's see. Go back to Vol Insights here for a second. Wow, look at this thing. This is crazy. That's just insane, man. That's just fucking, that is crazy. Message volume, all-time highs. Right? Message volume at all-time highs. Daniel saying, I want this in the ground. It sounds like Daniel has been short plug for the last 2 weeks. Poor guy. One like on the video is one prayer for Daniel's margin call that he's about to get. Oh, that's good. Seeing the volume at all-time highs here. Let's see. Stock still moving like crazy. So here's the thing right now. Realized vol is also really high, right? Implied vol is through the roof. Realized vol is extremely high. We're seeing the implied vol. Far-dated implied vol is actually almost at the highest we've ever seen it, which I find very interesting. Very, very interesting. Realized vol long term, realized is about 100. So 117. It's actually not crazy high. Let me think here. So obviously I don't have a directional view on this thing. If you did, let's say buy the stock. These options are just so expensive right now. I'm not really seeing much to take advantage of in the option space if you think this thing is going to go up. But what I actually would be doing is I would actually be watching this thing right now, right? So remember, important characteristic about vol, right? Watch, sorry for the bloodbath that's going to be on this whiteboard when I open it up, but I want to be able to show you guys something here. Come on, whiteboard. Let's load. Sorry guys, it's taking 10 years to load. It'll be up in a second, but I want to show you how we're gonna use a characteristic of volatility to make a really good trade on this, hopefully in the next few days. Oh, I kind of have it on here already. I'm basically gonna be drawing this out again. So, characteristic of volatility, numero uno. It mean reverts. All right. Characteristic of volatility number 2 is that it clusters. Okay. These are 2 characteristics that we are going to use. Eric, Eric, did the stream go down there, man? My computer fan turned on, but I don't know if the stream went down. So what do we mean by this? Mean reversion looks like this, right? Where the mean is here. What this mean reversion means is that when things go high, they tend to come down. When things go low, they tend to come back up. And we see this with volatility, right? When volatility is at all-time highs, it really only has one place to go. It comes back down. And when volatility is at all-time lows, it really only has one place to go. It comes back up. And we see an average volatility level somewhere in here. All right, all you need to do is, we can go to any stock pretty much, right? We'll go to the SPY. And we will take a look at the implied volatility over the last little while. We'll go to here, SPY. Right, you can see that it sort of stays, sure, it goes up, it goes really low, and it comes back down to this sort of like middle range. Right, very different from stocks, which tend to trend. This is, this is how volatility sort of moves. So coming back to our whiteboard, another factor of volatility is that it clusters. What this means is when volatility goes high, it tends to stay high for a bit. When volatility goes low, it tends to stay low for a bit, etc. This is sort of how you see volatility move over time. So coming back to plug, what we are seeing right now is that realized volatility is really high. We have seen it stay high for quite some time now. All right, so let's just look at the realized vol here over the last 3 months. Right, realized vol, or 6 months even. Right, we see here it was high, it came low, and now it's high again. It's breaking all-time highs now. Right, high, low, back to highs. So what I'm going to watch for is when this realized volatility or the actual big moves in the stock taper off. When we see a 1% day or 2% day, something like that, or maybe even a 3 or 4% day, right? Market's implying a 10% day here. If we see this realized vol drop off, where now realized vol is maybe 70 or 80, and implied vol stays high, which I think will happen simply because of these retail guys all over it. Right? Because of these retail guys all over this stock, right? 108,000 watchers, message volume up 35% today, sentiment being all-time highs. These guys are not going to let it go. They don't understand the characteristics of volatility like we do on this stream, right? These guys, you guys on here, you have an advantage over all those people there. You understand how this shit works now. When this volatility drops off, that's when I'm going to be looking to sell. And wait for that to happen, right? I'm not going to be doing it right now because volatility can stay high and the market can stay irrational longer than you can stay solvent. But once I see that drop, it's probably going to be a sell for me. right? Especially if this implied vol level stays as high as it is or continues to go up, right? These long dated options are looking extremely, extremely juicy. I just don't want to be selling it when the stock's moving as crazy it is right now. Any questions about that? Right? If you have a directional view on it right now, you're going to still be paying a pretty penny no matter what you do. I'll show you here. We'll go take a look at plug. Yeah, Andrew, I'd be looking at selling the options, collecting that premium. Remember, the premium is going to be juicy. The way we know it is because the implied vol is high. But think about it, Andrew. Right? Here's the easiest way to think about it. What are you really selling? Right? What are you selling? You're selling, let's call it an 8% a day move. All right, that's what you're selling. That's what the market's implying if we come back over here, right? Implied vol is at 132, right? We can see that, near data it's even 140. So you're selling an 8% a day move, but look at this thing. It's moving it moved 14% today. You know what that means? That means you lose. You sold it, you lost. But here's the thing. That's because the realized volatility is also high right now, right? The market's saying it's going to move like this, and it's actually moving like this. But eventually, it'll start moving like this again. And if the market is still saying it's going to move like this, well, now we want to go in and sell it. And the reasons are because of those two factors we talked about, clustering and mean reversion. These are the two reasons why I think that is a great way to keep an eye on this stock. I wouldn't be doing anything with it as it currently stands. Let me know if that clears things up. Structure the trade out. Yeah, it's going to be super basic. What I would probably look for, right, since I'm trading this level of implied vol, there's two ways you can structure it, right? Number one is, what is your view? Is your view that the level of implied volatility is too high? Or is your view that realized volatility will be less than implied? The reason this is important is the days to expiration you pick will change the exposures you have, right? Your Greeks, right? When you change your days to expiration, if you're super near dated, your profits are going to come from theta. Your risks are going to come from gamma. But if you're super far dated, your risks are really the level of implied volatility, your Vega exposure. So I can kind of show you that quickly here, right? Let's say we trade something super short dated. Let's say we trade next week expiry. Since I don't have a directional view on this thing, I would probably be doing something like this. I would sell this. Probably be my trade. All right, keep it delta neutral at inception. All right, max profit's a little bit on the high end, but I want it delta neutral at inception here. And you can see, when you're going to make money is as time passes. That's really like, look at how much your instantaneous P&L jumps every time a day passes, right? You make tons of money every day that passes. And what you're really sensitive to in terms of risk, right? If we look at this middle row here, is, it's our Vega, but it's also our gamma, right? So if we get that rapid move in the stock, right? Stock jumps down, let's say 10%, right? Sitting at, what's it sitting at right now? $70, moves down $7 to 63. We're going to be down quite a bit right off the bat. Let's put this to a one lot. Right, it cost you $1,600 to put this on. Does that make sense? Right, in this short dated option, you have a sensitivity to your Vega, but you mainly have, this gamma is what would kill you. But let's say we change this up a bit. We go a little bit further out. Let's say we trade the March or maybe the June. Take a look at the Junes. And let's say we do a delta 40 strangle or something, right? So 80s. And then, all right, what's going on here? I know. Hold up. Huh, you're kidding me. Okay, let's just say we do something at the money here. We have different strikes. Delta 50. Are you kidding me? Okay, let's see this. All right, check this out. All right, maybe do something like this. If implied vol drops, all right, let's say we think that implied vol will go down 30 points here, back down to its median. Right, you can see here your sensitivity is like almost all Vega. Right, you're short $308 of Vega, $16 of gamma. So if you get like a huge move in the near future, it's not like that's what you're really sensitive to. It's more so this. All right, let's say that implied vol drops 30 points. You make a ton of money. All right, now obviously putting on this trade is a lot more expensive. It's going to cost you $5,000 per lot. So, you know, this is not a trade for the faint of heart, but you could do something like this. Right, it just shows you how your sensitivities change depending on your days to expiration. So it really depends on what you want to view on. Those are the two things that I'd probably take a look at. If we take a look at the skew here, not a ton of skew really. You know, if you have a short-term directional view, you could do a vertical. You could do something like that. I don't know if I would be. You could maybe see this thing drift up a bit more. Sure. I don't really have a view on it myself, but if you did, maybe we could do something like this. Right? Come to the super near-dated options. Like, just look at this implied vol that these near-dated ones are trading at. Just through the roof. Right, you could buy a vertical here. Maybe trade the 50 and the 40, right? Or you can maybe do something like this. Look at that. What do you guys think of this trade here, huh? I think this looks pretty good. Stands, and the reason I wouldn't be doing that is because the thing is still realizing too much vol. Right? I'm waiting for this thing to stop moving. It's moving too much right now for me to take a trade. Remember, volatility clusters. If there's a 14% move today, the most likely move is a 14% move up or down tomorrow. I'm waiting for that to change to be a 2 or 3% move or a 5% move or whatever is more reasonable. All right? This is a pretty juicy looking trade though. Hey guys, I'm just messing around. This is what I'd probably look at doing short term if I thought this thing was going to continue to rally. Something simple. All right, you get about a 1-to-1 risk reward. Stock goes above $73, you make money. Cool? Carlito, how are you doing, my friend? Yeah, Eric, I was just messing around, man. Okay, guys, so I think that is going to be it for today's stream. If you found that valuable, please drop a like on the video. I do these streams every day, and I do tend to release a lot of video content as well. So make sure you hit the subscribe button and hit that notification bell. It lets you know when I release content. We're basically probably the only platform on YouTube that's constantly releasing really good quantitative-based trading education and information of this nature. So if you enjoyed it, keep tuning into the streams. I'd love to keep chatting with you guys. Andrew, it was so good seeing you here, man. Carlo, always good seeing you too. And we will talk tomorrow. Have a great day, everyone.